How to get a small business loan. In our last post we looked at different funding options for your small business, and today, we're going to dig into small business loans. For one business owner, it could be needing funds to get started, and for another, it's about having enough money available to cover day-to-day expenses. It isn't necessarily easy to get a small business loan, and that's largely due to the restrictive lending rules most banks abide by. Let's look at what you can do to help increase your odds of getting a small business loan. Prepare for your small business loan application. Before applying for loans, you'll want to work on a business plan. Lenders won't entertain your request if you don't have a business plan they can review. No one wants to lend their money to a risky venture, so take the time to flesh out your business plan before going any further. Clearly state why you're looking for a small business loan. Banks want to know that their borrowers will use the money wisely. If you can't tell them how you plan on using the funds they loan you, chances are, you won't be getting that loan. As part of your business plan, consider why and where you need extra funding. For example, many banks won't loan money to a new small business. This is because they want to know that you already have cash coming in the door, a positive cash flow, so they can rest assured that you're able to pay back your small business loan. If that's the case, new business owners may have better luck seeking funding through alternative lenders, like friends and family or crowdfunding. If you've been in business for at least a year and can prove you're making revenue, you'll have an easier time receiving a traditional small business loan from a bank or a Small Business Administration approved lender. Here's a piece of advice that extends well beyond getting a small business loan. Don't sign your name to something without reading any applicable terms and conditions first. There are many places you can seek small business loans, but they all offer different terms. Once you determine which type of lender and financing vehicle are right for you, compare 2 or 3 similar options based on annual percentage rate, total borrowing cost, and terms. Small business lenders tend to fall into 3 categories: traditional banks, micro-lenders, and alternative lenders. Small businesses can have a tough time getting approved for a traditional loan through a bank. Banks often require that you have a good credit history, aren't in desperate need of funds, and that you have enough collateral to make the loan less risky to them. Bank loans tend to operate on a debt financing model, where you'll need to pay back the loan, instead of an equity model where you can sell stock or ownership in your company for funds. The Small Business Administration, SBA, partners with banks and lenders across the nation to provide small business loans. However, that doesn't mean you're entirely out of luck when it comes to getting a loan. If you're not a good candidate for a traditional loan, look into microlenders. While you may not receive as much funding from a microlender, it can be just enough to get you on your feet or launch that product you've been testing and are ready to release. Alternative lending encompasses everything that isn't a traditional bank loan, but that doesn't mean it's held in less regard than a traditional loan. If you don't have the business tenure or credit score to land a bank loan, and you're looking for more than what a microlender can offer, alternative lenders can be the perfect solution. Instead of a debt financing model, many alternative lenders offer equity financing. This means that instead of having to pay back a debt according to specific terms, you offer the lender a stake or ownership in your company in exchange for the funding. You can read more about various alternative lenders in this post. What prevents you from getting a small business loan? Competition in business is fierce, and not everyone will receive a small business loan to help them succeed. Wondering if you've got what it takes to be approved for a small business loan? Not having a business plan isn't an option when applying for small business loans. Why is a lender going to waste their time and money on your business if you haven't bothered taking the time to create a plan? Banks won't offer a small business loan to someone with bad credit. In fact, most banks insist your credit be at least in the 680 to 700 range, if not higher, before they'll consider you a viable candidate for a small business loan. If you don't know your credit score, the time to find out is now. Banks want to be assured that you're able to pay back your loan before they'll approve you for it. It's a good idea to regularly calculate your cash flow so you're always prepared in case of emergencies, and so that you can approach lenders with confidence. Lenders are constantly approached by people looking to get a small business loan, so come prepared with an organized plan and appeal, and let your personality shine through to set yourself apart from the rest. Now that you know what lenders are looking for when you apply for a small business loan, and what to have prepared before you apply, it's time to shop around for the right lender and get your small business loan. We'd love to hear about what has and hasn't worked for you when applying for small business loans, so let us know in the comments below.